The best investment is an index fund, which is inexpensive, easy to use, and supported by financial gurus like Warren Buffett. The conundrum is this: what if everyone is acting in a dangerous way by doing the same smart thing? The biggest risk associated with index funds may be their popularity, which is the reason they are so successful. While trillions of dollars pour in mindlessly, experts like Michael Burry warn of a bubble. So, are index funds still as safe as we believe? Let's get started. What are index funds? An index fund replicates the stock market like a robot. Purchasing an S&P 500 index fund automatically gives you small stakes in each of the 500 companies in the index. No stress, no stock selection. Reasons for their popularity: low fees, typically less than 0.1%. Immediate diversification, outperforms the majority of professional investors over time. The catch is that you're actually investing in a copy of the market rather than the market itself. Additionally, copies have blind spots. 3 dark truths of index funds. Number 1 is the illusion of diversification. Instead of purchasing 500 businesses, you are purchasing 7 tech behemoths with 493 subordinates. 30% of your S&P 500 fund is made up of just 10 stocks. Your portfolio gets sick when they sneeze. Number 2 is the silent takeover. Today, the 3 unseen giants, BlackRock, Vanguard, and State Street, own 20% of all significant corporations. They cast your vote, but you never instructed them to do so. Number 3 is the liquidity mirage. Index funds are popular until everyone tries to sell at once. March 2020 demonstrated that when panic strikes, even safe funds can freeze. When the crowd rushes, the exit door gets smaller. Think about this before completely abandoning index funds. 85% of active funds are unable to outperform them over a 15-year period, proving that they continue to win in the long run. Since they are less complicated and more affordable than alternatives, they are the least bad choice for the majority of investors. The actual answer: awareness. Diversify beyond the S&P 500, but perhaps hold on to index funds. Index funds are fantastic until everyone starts relying on them without question. Be wise, broaden your horizons, ask questions, and never stop learning. Please hit like and leave a comment below if this opened your eyes. For more honest financial discussions, subscribe. I will see you then.